Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Yuri shares his winding path starting out graduating from his master's program in London right at the start of the global financial crisis and turning down an offer to start at Goldman Sachs to travel the world and try to get into a more direct investing role. Listen to his great advice on specific questions to ask when interviewing for asset management or hedge fund roles as a junior analyst, and also make sure to check out his blog, snippet.finance, a place where he shares interesting snippets of financial data and analysis. Enjoy. All right, Yuri, thanks so much for joining the Wall Street Oasis podcast.
Thanks very much.
So it'd be great if you could just give the listeners a short summary of your bio.
Yeah, absolutely. So probably take you all the way back. I'm originally from Armenia. I was born there, and after the collapse of the Soviet Union, we moved to Denmark. That's where I grew up. So I've got quite an international background. And I went to international schools here in Denmark and decided that the best place to go was the UK, and I started studying there. I did my undergraduate at Cambridge for 3 years studying economics. And then I did this master's at LSE for 1 year, studying, sort of completing my studies in economics. Mm-hmm. And this was around 2008 timeframe is when I finished my master's. Exactly, good timing. And I remember I was working at Goldman Sachs doing an internship in their sort of private equity asset management wing. And, I wasn't sort of enjoying it too much. It was a bit of a tough time. And then when they offered me the job, I actually decided not to take it. And I remember saying, quit, basically speaking to the managing director on the phone saying, I'm not interested in taking the job. And that was on a Friday. And he sort of tried to convince me, and I said a final no. And then on Monday, Lehman Brothers collapsed and the whole world blew up. And basically I was kind of kicking myself thinking, I've obviously passed up on this great opportunity at a great firm. What have I done, et cetera, et cetera. But actually it kind of all worked out in a funny sort of way. And the world sort of has a tendency to do that. So I took a bit of time out. I went traveling. And then as 2009 rolled around, I basically started applying for jobs. And at the time, I knew my passion was in investing and in asset management. And I just wanted to get into that. So I sent out hundreds of applications, as everybody else does, to all the asset management firms in London. I remember opening the back of the FT and just going through all of the companies, sending it out. Nice. Obviously, plenty of places weren't hiring. And that was kind of one of the lucky things. And I think given the current environment and what people are going through, sometimes these kind of crises throw up opportunities that the good firms are out there looking for people to hire. And if they're hiring, then, you sort of almost have this positive selection effect, which I would say was really positive for me. So I ended up at a firm named Majedi Asset Management, which was kind of an up and coming scrappy boutique in the UK asset management space. They were started in 2002 for a bunch of guys left Merrill Lynch, decided to start on their own, built a business from nothing to, a reasonably big business by the time I joined. And I was the first kind of graduate hire on their graduate program. There have been many ever since. Mm-hmm. And I basically worked my way up. So I started as an analyst on the internal hedge fund they had. I did my CFA. I learned all the ropes of investing and, under really, really, really sophisticated and good investors with a great track record.
Mostly equity, like what type of debt?
Yeah, so the fund, it was a long short fund that was 100% equities. I primarily kind of focused on UK equities because that was the pedigree of the sort of fund management house. Mm-hmm. But we did a lot of other international stocks as well. It was just a great time because I was in a good place. The people make a huge difference, and the people I worked with I really loved and I learned a lot from, and they respected me as well, despite being kind of an analyst and just kind of fresh off the sort of intellectual boat that sailed into the city. Yeah. And I just loved their respect for kind of intellectual honesty and just people having a view about stuff that they might not know anything about. And so I just worked on equities, did the whole CFA thing, which was obviously a long process, as kind of many people have gone through before. Again, lots of support from the firm for that. And eventually I worked my way kind of up, and there was an opportunity that opened up for a fund within the company that was kind of starting up, which was a focused, like a UK income fund focused kind of fund. And I just took it. And together with my boss, we basically built that fund from nothing to a £1.5 billion fund. We sort of beat all of our competition over that period and performed really, really well. And so it was also another really great kind of learning curve where you go from analyzing companies to actually building portfolios and making investment decisions, which is a completely different game. And also obviously a lot of fun talking to clients, meeting clients, and trying to convince them to invest with us, which is, you know, a whole sort of other area.
All different, yeah.
Exactly, all of the experiences that you build on that. And so we ran the fund together, and then last year, you know, we, for lots of various reasons, which I don't care to kind of say on in a public venue,
Sure.
I decided to actually leave Mojedi after sort of 10 years. So I guess slightly different to a lot of people in the sense that I stuck to one firm for a very long period of time. But this is a firm that gave me my education. It gave me all of this valuable experience. And I really, really loved and valued the people that work there. Mm-hmm. And I would say, I want to say it's rare, but it probably is quite rare among people out there in general, having this kind of experience.
Oh, yeah.
And it was a difficult decision.
10 years is a good run. 10 years is a really good run.
Absolutely. I think so. And I didn't want to leave in a bad way. So what I decided to do is I was going to take a year out and I was going to slightly pivot my career into a sector that I really liked, which was biosciences. So I left Mojedi, hung up my investing shoes on the 30th of June, 2019, and basically spent the last year doing a master's in bioscience enterprise, it's called. Mm-hmm. So it's think of it sort of as a mini MBA for people who like biotech. Cambridge is trying to create, they've got a huge ecosystem of biosciences and really, really interesting firms and venture capital funds and things like that. And I just thought, you know, that could be really fun to do for a year. And then I'll decide what I'll do after that year. And that's kind of where you find me, slightly just having finished my dissertation. So being a student that kind of after 10 years of working, it's fun. It's good. Highly recommended. I mean, many of you out there will probably be considering MBAs or whatever. And I think it's a great, you know, idea to do that. Take a break, think about what you want to do with your career. Probably not quite as late as I did it, but it's still a great time. There's a lot of really exciting ideas going on in the world right now. Mm-hmm. And universities are hotbeds of these ideas. I feel like young people are a hotbed of these ideas. And it was just about kind of exposing myself to all of those things. So that's why I decided to do that. And then, you know, my heart is still in investing, so I'll probably end up doing that in some sort of capacity, more entrepreneurial, I think, more like doing my own thing or with my sort of former colleagues or whatever it might be. And
during your time at school, you started Snippet. Why don't you talk about Snippet a little bit?
Absolutely. So yeah, thanks for picking up on that. It's so one of the things I wanted to do was not to lose touch with the financial markets, and that was kind of a personal reason. But what I really found that I enjoyed the most when I was working at Mojedi was kind of finding these little nuggets of information. I call them sort of snippets, where it's something that's really interesting and it's very different. And investing is all about thinking in a different way to everybody else in the stock market. And I was finding a lot of these nuggets of information, lots and lots of various sources, mostly online. And I decided, well, I don't have an outlet selling this to sort of all of the people at my firm, so I'll start a blog. And I started a blog which is called snippet.finance, literally just snippet.finance. Mm-hmm. And the idea is, let me just put together little snippets. There's sort of, you know, if you sign up for the email, there's about you get 3 emails a week, 3 snippets, very easy to read. And there's links usually to, if you want to dig deeper into the topic. And, you know, the idea was just to impress people, impress your boss, impress at interviews, impress whoever with a little nugget of information that makes you look a bit different to, say, just reading the FT or the Wall Street Journal. And it's been a, you know, really exciting experience as well, like kind of building all of this from scratch, which, you know, it's just something else to do. And just, I really, really love that part as well. And I just love finding this information and giving it to people. And I hope people pick up on it and kind of see the passion about finding these little nuggets.
Let's go back. Let's rewind. Let's go all the way back to your undergrad. Mm-hmm. And we'll get into that a little bit more. But were you always, you know, you said you were an economics major, right? You're studying
That's right.
economics.
Yeah.
Were you always interested in finance? Did you know you wanted to be an investor, or when did that first kind of
Yeah, it's a really good question.
your family in it at all? Like your
No, both my parents are scientists. My father is a physicist. My mother's a biologist. So not my family. Finance was very far removed from Soviet Union or Armenia or anything like that.
Mhm.
I would say it was a bit of a journey, which is probably the right way to approach any of these things. So I was studying economics. I kind of heard a little bit of finance in my first year. To be honest with you, I really didn't know what it was. I didn't know what investment banking was. But what I knew was I wanted to try it out. So I did an internship at UBS in equity capital markets and ECM. I thought it was very enjoyable. But what I really got excited about was what the people kind of on the other side who we were selling the securities to were doing and why they were making the decisions and things like that. It was an enjoyable time at ECM, but it wasn't quite for me. And I think it wasn't just as intellectually interesting as kind of doing it straight up investing.
It was more transactional.
Exactly. It was more transactional. There was a lot of sort of salesmen and, all these really valuable skills, of course, but my heart and my mind kind of lay with intellectual endeavor and kind of understanding how the world works. So it piqued my interest already at that point.
Are you saying
but I actually
equity capital markets isn't intellectual? I agree with you. There's obviously a lot more sales. There's a lot more pitching. There's a lot more art, we'll say, on the valuation side than
absolutely.
When you're an investor, you really, you care about the truth and the intellectual honesty. It really is.
Exactly. I think that's exactly right. And I mean, people have sort of, I'm not covering any new ground or any new revelation. No. I think that's the way it is. And it was 2006 as well. So it was sort of go years. There was a lot of transactions going on. And it just didn't feel like an environment that I would thrive in. And I think that's really important for people who are looking for internships and jobs, is to sort of find places they're going to thrive with the right people and the right sort of environment. So I then had this interest, but then my pendulum swung completely to the other end of the sort of intellectual scale. So I did economic consulting, which is another interesting field for economists to have a more commercial kind of impact on companies. This is all about antitrust and economic policy and trying to understand, essentially, are mergers allowed to happen from the perspective of the consumer and how we can defend that in court. So I did that one summer. Again, it was a bit too far down the intellectual rabbit hole. And at the time, I was already very interested in reading about finance, which is kind of one of the reasons why I love Snippet and I love reading about all of these things. It started at a very early time for me. And I was just constantly reading about things, reading about, lots of different blogs like FT Alphaville, etc., and just learning about finance. I was getting really interested in it. And then that was at the point where I started investing myself a little bit. Mm-hmm. So I started looking at, companies. I started looking at broader ETFs and countries and things like that, and thinking about how you take risks and how you sort of build a portfolio. And so I had caught that bug, but I had one more internship slot, and that's what happens when you have a master's. So I could do one right after the end of the master's. And I decided to go for Goldman Sachs Asset Management. Mm-hmm. They put me in the private equity group, which is you'll never hear me say anything bad. It's a great organization and it's a great team.
And so what do they do? What's the private equity group and asset management?
So it's
private equity clients, basically.
Yeah. So it's actually, it's a fund of funds of private equity funds. That's their main business.
Got it.
And they invest in private equity funds. They do a lot of co-invest deals as well alongside the private equity funds they invest in, and a little bit of direct investing, but mostly that was their kind of main bit. And they were raising big secondary private equity funds to buy LP interest off essentially struggling, anyone was struggling in the financial crisis. Yeah. And it was an exciting place to be. And obviously Goldman Sachs is a fantastic company and a fantastic brand, but it was very sort of cutthroat. It was hard. Sort of, I didn't have a good interpersonal relationship
This was in London, correct?
This was in London. And this was one of the other problems with it, which is that the team is essentially 90 people in New York and 10 people in London. Yeah. So the power base is very much in London.
Or New York.
And in New York, yeah. And which, I mean, to be completely honest with you, means that you will have no life, because you always have to be on for whether you're in New York hours or London hours. And it's...
What were your hours that summer?
really, really bad.
Like over 100?
I pulled a few sort of 4 a.m. nights.
Yeah.
It was a lot of work. To be completely honest with you, I wasn't 100% sure why it had to be done exactly at those times, but I think it was a bit of a rite of passage at the time for internship, wasn't it? It was a lot of work. The managing directors and partners were fantastic. They were, really positive and just had a great relationship with them.
The hard part's the analysts and the associates are under a lot of stress to push and impress. Yeah. And so they're forcing work on you at all hours of the night. And they're like, where are you? It's 2 a.m. Where are you?
Exactly. And I think it's sort of a divide, but that's just the way it sort of is in that kind of
very similar to banking. Yeah. I'm surprised asset management was like, I guess you guys maybe it was the intern program, bit of it, like a little bit of a rite of passage, see if you could cut it.
Yeah, I think a bit of a rite of passage, bit that was private equity, so it was transactional, so there were deadlines to get things done. But I'm not sure. I guess in the end, it was
power dynamic being New York, and then the time zone differences crushing you.
Exactly.
You're almost supporting some teams in New York sometimes.
Yeah. So I spent a lot of times like working with the people in New York, and basically, if you're ever in London and you're working with people in New York, it's just hell essentially for people in London for the time wise.
I'm sure.
And so I already told you the story of the way I kind of decided on that. But at that time, I was just 100% into investing. I thought that Goldman Sachs Asset Management would give me a real experience on the investing side, and it did. But it was a lot of secondary type of investing where you're investing into someone else's fund.
Yeah, so you're doing more fund analysis, and you're looking at the managers really, rather in the track records and analyzing that rather than analyzing the company specifically, which is really wanted.
Exactly. And so for example,
were you able to communicate that to when they were trying to convince you to stay and join?
Yeah, I communicated all of these things that essentially I wanted to be at the coalface of investing. I wanted to actually make decisions of which securities went into the portfolio. That's what I enjoyed. I guess the thing I would say is that I didn't want my destiny determined by somebody else. Because if you're running a fund or you're making equity investment decisions, you're in charge of your own destiny. You think Microsoft to buy, it goes up, fantastic. You've done really well. It goes down, you did really badly. Whereas if you then say, okay, I think Patrick's an amazing investor, I'm going to give him money, and then he blows it up, then it's not your fault really, no matter how good you are at picking investors. And actually that influenced my job decision, because one of the job offers I had later on was for a sort of consultant for picking funds, and I just decided that wasn't really for me in the end as well.
So it was I think it was helpful. It sounds like all your internships were helpful in kind of helping just solidify your desire to be actually in an investing seat. So tell me how you came out of that. You went on a trip. Where'd you go? After saying the world exploded.
The world explodes. I spent a bit of time living in Germany just because I kind of wanted to learn a bit of German. And then I went traveling to Southeast Asia. So I'll tell you another funny story if you like.
Yeah.
So I started applying early 2009. Obviously, the world was complete chaos. And, I was a young analyst trying to apply for jobs in finance.
Well, you hadn't really even worked full time. You had just done internships.
No, just internships. And the internships are really
rare. Sorry to interrupt, but how rare is it to come out of your master's, have an offer from Goldman Sachs and turn it down?
I think most of the people whose advice I took
that doesn't happen, right?
Yeah, it just doesn't happen. I think I made the right decision because the person who took my job wasn't very happy afterward, with that kind of environment, and it just doesn't happen. I know I'm probably one of the, in fact, at Majetti, they used to bring this up.
Yeah, I'm not saying it was the wrong decision. I'm just saying the fact that you had the confidence to turn that down is really saying something at that young of an age. What were you, like 22? 20?
Yeah, 22. That's right. Yeah, very young, probably a bit dumb, but I would say...
A little naive, a little bit. I am going to be...
A little bit naive. But I think the message I would sort of say is that it's possible. There's a lot of different firms out there. I didn't obviously foresee that the financial crisis was going to get so bad at that point.
Right.
But I think it's important to know what you like as well as what the sort of big firms, they want. Everyone obviously wants that coveted place, but if it's not for you, it probably isn't for you, and you're not going to get the best out of it.
Yeah. So you lived in Germany for a little bit.
Lived in Germany for a little bit. And so then I came back to Denmark. I was trying to apply for all of these jobs, as I said, back of the FT, going through each one of the.
You weren't in London at that point? Or you had moved?
No, so I was flying kind of between London and Copenhagen for interviews. I knew I wanted to live in London, the financial kind of capital. Yeah. And then I sort of did a few first round, second round. So I was interviewing with kind of 3 or 4 firms, and I managed to make it to the second round, but I had a ticket to go traveling to Southeast Asia, you're sort of Vietnam, Thailand, etc. And I had a ticket, and I was like, well, I'm going. So I basically left in the middle of the sort of interview process. And then I was traveling around in Vietnam, and I get the call from both companies that were kind of very interested at that time. And they say, we want you to come in for a final round. And I'm like, well, there's a slight problem. I'm in Vietnam. I'm a bit far away. And they said, okay, well, and then after a bit of discussion, they said, okay, fine, we'll pay. So what I did was, I'm sort of embarrassed to say this publicly, but I basically got one company to pay half of the ticket and the other company to pay the other half of the ticket. Each thought that I had paid myself to come back. And, at the time, that was quite a lot of money, basically, for a young student, right? So I show up. I remember this very clearly. I leave by train. I go to Hanoi. I jump on a plane. I fly through Bangkok. I land in London. I go to my friend's place. I didn't have a lot of things there. Everything was in Copenhagen. I borrow his oversized suit. I show up at the interview. And I think just the process of showing up was probably the reason why I got both jobs. They just said, look, he's traveled all the way here. Obviously, I had to impress them as well in the final round. And then I remember flying back the same evening.
These were for hedge funds, though, basically?
These were, so there was 2 funds and a consultant firm as well. So I had actually 3 interviews when I came back.
Okay, and so but these were for like actual investing roles, and one was for consulting. Okay,
one was for consulting, exactly.
And so, what were the interviews like? Like, pitch me along.
Oh, right, yeah.
Or what did they force you to talk about your track record on your personal portfolio?
No. Right. So I think maybe this will also bring to life kind of some of the tips I've got, because what I've also been fortunate enough while I'm at Jetty is interviewing people as well. Mm-hmm. So I have quite a lot of experience kind of both sides of the table. So the questions are, so the main thing that I think won people over is that I was reading a lot about finance. And when I say a lot, I was religiously reading everything I could possibly, and I was just hoovering up information. Mm-hmm. And I think that came across that I had a real passion for reading and investing. In the end of the day, as Warren Buffett says, it's just about sitting at home, at your office and reading as much as you can possibly. And I think they look for that. I was intellectually curious. I knew how to kind of connect dots of information, say, well, this is interesting here, this is interesting here. Could this be more interesting if we think about it together? The questions were, to Majetti's credit, their questions were really fun, and it was just a fun interview. They asked really tough questions. So they would sort of ask these kind of, I'm probably not allowed to divulge what they were, but things that you wouldn't necessarily expect in an interview, but they were sort of not brain teasers necessarily, but they would ask you why you think a certain thing was the case, that and it's not something you would have ever been able to read up on, and then you just had to kind of argue for yourself on the spot why you thought that was the case.
It's more just your logic, your structure and logic.
Exactly. So the way you thought about something, your arguments, what facts you would bring forward, even if you had no idea what this topic was, I'll give you one example. For example, why is the Dutch national team so good at ice skating? That's an example of a question. So something like that, kind of left field, you don't really think about it, but there's a few obvious things you can go for and what it is that you exactly go for. There was a lot of stock conversation, what kind of stocks, why are you interested in this? Your typical, a lot of times they will give you like 3 different stocks and they say, which one do you think is good? My piece of advice on that would be just have a view. So don't sit on the fence. Don't say, oh, I think this one's good, this one's good, this one's good. And then you don't have a conclusion. Make sure you say, I like this stock, because they're really looking for people. We were looking for people with conviction in their sort of views. And it doesn't really matter what the answer is. And you're probably going to be wrong or right. It doesn't really matter. What matters is that you had conviction and you proved why you thought that was the case. So that was kind of, the interviews, there's a few sort of math stuff, a little bit of, one of them kind of made me do a stock test.
What kind of math?
So that was the consultant, actually. They just took out a page from the GRE exam and they just gave me like 20 GRE questions. And they said, here you go. Which is, I think if the GRE is it's not easy, right? I actually think, sorry, apologies. It was a GMAT, not the GRE. So a slightly harder mathematics. But I think it's quite intuitive math. So
probability and combinatorics a little bit in there.
Exactly. That kind of stuff. And it was sort of just go for it. And I think I did all right. So, cause I got offered the job in the end. Mm-hmm. I'm trying to think back to the other interviews. Genuinely, when I interview, I just ask people, tell me about something interesting you read. Tell me explain to me like maybe your dissertation, a topic that you would know really well, or a topic. And I just want to see how people see the world and understand things. Mm-hmm. I'd often ask people their relationship to risk, like what do they feel like about risk taking? Because at the end, investing is a lot about psychology, right? So I'm trying to understand, is this person suited for the psychology of investing? And you won't know until you actually buy a stock and it goes down and things go badly. That's really the lesson.
Panic. Yeah.
Exactly.
Person can't come to work, they're sick all day or the next day because they're
exactly, as everyone's experienced that kind of environment. But it was just I think it was my ability to converse on a very high level about what was going on in the world. At the time, there were so many crazy
reading. That just comes from reading so much. You were actually interested in it and wanted.
Exactly. And it's not something you can kind of cheat at, which is the other thing that comes out from it. You really just have to put in the hours of work of reading up to that point. And you'd be surprised as well how many times I've asked people, tell me something interesting you've read, and they say stuff that they read in the morning's FT that I've obviously also read, which is not a good answer.
It's not so
exactly. And actually, the most amazing answers I've gotten had nothing to do with finance. They were about something completely different. And it just shows that investing kind of covers everything, doesn't it, in the world, which is what I think.
So that's interesting. Let's go back. So you get the offer after flying. Mm-hmm. Did you get to go back to Thailand and Vietnam or?
Yeah, so I fly back. I fly back to Bangkok. I land in the airport. I open my email. I don't think we actually had phones then, even though maybe we did. I can't remember.
You have three offers.
I got 3 offers. I'm like ecstatic. I'm like, this is amazing. I obviously put it down to the fact that I managed to fly all the way there and came, in one piece. And then I had to sort of decide which one to go for. And as I said, the consultant job, it was because I had a particular interest in kind of nonprofits, and they helped a lot of nonprofit organizations manage money. I thought that was interesting, but in the end, I decided I would rather be in charge of my own destiny. And then, it comes down to things like, how much are they offering you? Did you like the people? Did you like the culture of the company? Have they had good performance historically? Are they sort of mostly owned by the employees?
How much did they share of that, like performance before going in? Like, did you get more information from certain funds than others,
Yeah, you get a little bit more from funds and others, but to be honest with you, I think these are really important questions. Just ask the people that you're interviewing. How's the performance been over the last couple of years? As long a track record as you possibly can see. Mm-hmm. Who owns the firm? Who's the main decision maker? How are decisions made? It's often questions people don't ask because they often see like a brand name and they're like, okay, that I think I know what that is, and it sounds prestigious, so it's great. But I think it's very important to ask those questions, particularly the employee-owned culture. So it was quite well spread out. Like everybody's had a bit of a share in the company, made it feel like a family almost. I think that was very important. The track record was excellent. The decision-making was devolved to all the different fund managers. So it meant that you could influence people a bit more than if, say, there was a committee or there was like one person who made all the decisions. I don't want to sort of paint lots of other funds in different bad lights, but over time I've learned that those are the things that make really good cultures, especially for younger people coming in to learn about stuff.
Flatter structure with different fund managers that could be influenced by the analysts and the associates.
Exactly. Makes sense. Flat structure, same office, and your idea can sit in lots of different funds. It's a perfect environment for someone to thrive.
So I don't want to keep you too much longer, but let's quickly run through, like, what was it like when you first started? What were the surprises?
So investing is really hard. That would be the first surprise. It really, really sucks when you get something wrong. It's a weird environment that you're almost every millisecond, you know exactly how well you're doing, which is a different mindset from being in school where you're getting graded or whatever. And you sort of roughly know how you're doing, but you don't. Whereas imagine every, if you're working at school, like every second someone comes to you and says, okay, you're doing great. You're doing great. Oh, actually, you're not doing so great. You're doing great. It's a weird sort of mental.
Like your ear, like that.
Exactly. In your ear constantly. There's a lot of sort of noise going on. You need to kind of learn to tune all of that out. You need to learn to accept the fact that that's your performance is going to be assessed like that. You need to also start learning about your own psychology, which was a big thing that kind of shocked me to begin with, that the stock market kind of invites activity. There's a lot of psychology that's involved. And so I spent quite a lot of time learning the psychological side of things. And I think that's really, really important to get to grip with, especially in the second learning curve. I was very fortunate. I had really great sort of mentors and people who just were fantastic and kind of selflessly helped me at a very granular level on how to understand how to analyze companies and to look for various things. And then I had slightly more senior mentors who really took the time, sit down for you for an hour and explain their thought process. So it was a very nurturing environment for people to learn how to invest, essentially.
How did you progress? Did you feel like your performance just got better and better and better, or did you hit a rough patch? So how did it evolve?
Yeah,
years?
I think at first we were learning so much, we got good, but it's sort of it's a bit of the stock market is like this. I was fortunate that it just went up pretty much. If you think about
the whole 10 years, yeah,
exactly, whole 10 years, 2019 was just a bull market. We had a wobble in 2011. There's a few wobbles.
Were you net long then most of the time?
Yeah, because it was I was mostly the hedge fund wasn't that long, and then when I transitioned to the long only fund, we were obviously quite happy for the stock market to go up, and we were sort of quite bullish on things in the UK that were going up. So it helps. Obviously when things are going well, we had a rough patch in 2016 during Brexit, which was obviously not great to be in a UK fund in Brexit. Yeah. Those are the real learning experiences. Like you really learn a lot about yourself and how you're able to deal with these kinds of environments. Yeah. And you have to make quick decisions and understand what's going wrong. And sometimes you have to just, walk out of a stock just because you realize that it just doesn't have a future overnight. Right. And that's what's happening in Corona. And sometimes it's difficult to make these decisions. So it wasn't all sort of rosy and fun. Yeah. And there were very tough times and, you made mistakes. But the key thing, I think, is just we spend a lot of time learning from those mistakes. And then you just got better the next time around because you saw it before. And having good mentors really, really helps a lot because they've been through all of this multiple times over.
And looking back at your time there, anything like, so you started off as, what was like your title, like just an analyst, hedge fund?
Yeah, so I started off as an equity trainee analyst. Then I became an equity analyst, and then I was promoted to basically co-manage the fund. So essentially, there's a pool of sort of analysts, and then people who had fund management responsibility got promoted, and I was just a fund manager, and then I became kind of co-fund manager of this fund. I had a stint.
How did your responsibility shift from doing the actual analysis to kind of managing more of the ideas coming into you?
Yeah. It's a good question. Very, very good question. It depends on the firm you work for. At Majetti, the fund managers did a lot of the analysis work themselves. So everyone was a generalist. Everyone focused on whatever sector area of the market they thought was interesting. Everyone was doing their own work. Obviously, the analysts were producing research, you were reading it, but you had to be able to interrogate it at their level, which is how we were sort of brought up to do this type of thing. So I would say it changed, but it didn't. The things that changed is you had to figure out how to construct a portfolio, how to size positions, how to make investment decisions consistently.
Did you feel like when you became a manager, were there certain analysts that clearly were better performers, or did it wax and wane in such a way where was there ever how many people were under you at any given time?
So for the income fund that I co-managed with my boss, we had 2 analysts directly under us. And then there was a sort of wider analyst pool of maybe sort of 6 or 7 people as well.
Okay. So it wasn't like a ton of people. So you're working in tandem with those other 2 kind of all discussing ideas.
So I was working very closely with them. We were kind of a close-knit family, and that was what produced all of the ideas.
Yeah.
In terms of kind of waxing like people, I think it's a little bit like basketball, isn't it? Sometimes someone has a hot streak, sometimes they don't.
Yeah.
The problem with stocks is that because our holding horizon was two to 3 years, you only really realize kind of further down the line, and everyone can wait, right, in the stock. That's the thing. So it's although you can see the performance, it's very difficult to know, has that investment actually matured as you expected it to mature? And that's the key thing that differentiates. But I would say Majetti was very good at hiring good people who wrote great research and made really good investment ideas.
So if you had for people looking into a job similar to this, maybe in the UK or even in the US, but any advice you'd give them specifically around how to kind of survive inside of a firm like this in terms of developing those relationships? Because I feel like a lot of it says it seemed like a great place in terms of culture and very kind of mentor centric, which helps, right? It makes you feel
absolutely
more confident when you have that down week or down year. Tell me a little bit about just anything that the students could do kind of to position themselves to find a fund like that.
Yeah. So as I said, when you're looking for the fund for externally, and make sure you ask all of those questions about culture, about decision making. Frankly, you can even straight up ask people about their, the ego of people, who's kind of calling the shots. This kind of stuff it's fair game. You're going to commit so much of your time and your sort of psychological headspace to this place.
Did you do that when you were interviewing?
I've, and I was lucky because during the crisis, Majetti was, a great house. It survived the financial crisis that was hiring people. So I almost had like a self-selection because the bad funds weren't out there, were they? They were sort of folding essentially at the time. And so I'd say make sure you ask all of those questions. That would be the first thing. The second thing is surviving this sort of environment is early on. What I really like seeing from analysts is kind of having a view and sort of sticking your neck out about things. I know it's really difficult to do. I used to force all of our analysts to put the conclusion kind of first on any research piece they put. It just makes you that mentality that, this, in the end, I'm going to have to make an investment decision on this. So you should be making an investment decision on this yourself. And that's really, really important. Just stick your neck out. Don't worry about it. The outcome will be what it will be. You're just learning at that point. Mm-hmm. That's important. But as you correctly pointed out, you need a very supportive kind of culture to allow you to make mistakes in that sense. And in the end, the mistakes is really how you progress as an investor. If everything really went perfectly, I don't think you'd actually learn what the skill of investing is all about.
Yeah, you're amazing. You'd have your ego would grow probably over the years, right?
Exactly, absolutely, and become completely astronomical.
So tell me kind of what's next for you. Where can people find you? Obviously, snippet.finance. Anything else you want to share before calling them?
Yeah, so definitely sort of check out snippet.finance. That is I love that project. I'm going to be doing that for a long period of time. I'm going to be writing that content. There's a contact sheet there, contact email address there. So just, drop me an email if you have any questions or anything like that. Always happy to chat. I do quite a lot of that kind of stuff. And then I think I'm going to, probably take a bit of a holiday because I've been doing this master's and it's been full on, as you can imagine. And after that, I'm just going to get back into investing in some shape or form. Exactly how that looks is not yet determined, essentially.
You think potentially at another asset manager or hedge fund?
Either at another asset manager, doing something on my own, maybe with some former colleagues, or potentially coming up with something slightly related to biotech. Those are the three things I'm working on at the moment.
That would make sense, yeah, given your new
exactly
master's. Well, listen, Yuri, thanks so much for taking the time. I really appreciate you sharing your story with all the listeners and with me.
Great. Thanks very much, Patrick. Fantastic.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, patrick@wallstreetoasis.com. Until next time.